I was saying earlier at the start of the show that it looks like the market is really confused about which direction to go, because we get one or two very strong days followed by one or two very weak days, kind of like the picture that we are seeing today. So what are the forces that are pulling or tugging the market in opposite directions, and what is the reason for the confusion at this stage?
Afternoon, Fifi. There's definitely a lot of confusion in the markets at the moment. And as you correctly point out, there are various factors pulling people in different directions. If we just have a look at the two large economies, the US and China, you can see this quite evidently. In the US, we had GDP, second quarter, quarter on quarter annualized GDP coming out yesterday. The market was expecting 8.4%. The figure came out at 6.5%, which seems like a large miss, but it seems to be largely due to reduced government spending, and consumption or consumer spending grew quite well, around 11%. However, when you look at initial jobless claims figures, we start to see those creeping up slightly. So you're getting a bit of a mixed bag, as well as if you have a look at the FOMC meeting that ended. Fed chairman's statements do suggest that the governors are a bit divided with regards to the issue around tapering, and as well as the outlook for inflation, as per the dot plot. So you have a bit of a mixed bag with some positive and some negatives. The same applies on the Chinese side as well, with the recent tech regulation around internet companies. The Chinese regulators did try to appease global investors, the meeting with some large investment banks and mutual funds yesterday. However, it doesn't seem that some crucial answers around variable interest entities were provided. However, they did stress that there wouldn't be any further regulation going forward. So again, a bit of a mixed picture, and we see that playing out with the volatility we've seen over the past 2 or 3 days.
Yeah, and that's also spilling over into the currency, with the rand also backtracking on some of the gains it made yesterday, although not to the same degree as the JSE. I was speaking to another fund manager, and I was getting his sense on where the rand could be headed to next. He's quite optimistic that if the current backdrop stays in place, we could be headed to the right side in terms of a 14 to the dollar or so in as soon as 2 weeks. So I'm interested in your view of the currency against what is going on in the global and the local economy right now.
Well, I don't believe I can give an answer with a high degree of confidence as to where the rand is going to be in the future, unfortunately. What I can say is that we've definitely seen increasing levels of uncertainty, and given that the rand is the most liquid EM currency, and given what is happening with EM globally at the moment, largely driven by the recent regulatory activity in China, there is going to be heightened volatility going forward. It's very difficult to say what that means exactly for the rand. We have seen positive EM capital flows year to date, and even over the past week, although at reduced levels. And this has been more on the equity as opposed to the bond side. As far as South Africa is concerned, we obviously know that there's a variety of factors that global fund managers are concerned with. And in the short term, that is the major driver. So there has been some slight positives. You did mention, obviously, the reinstatement of the relief grants going over the next year or so. That is not going to be a positive move, which is positive for people concerned around fiscal sustainability. And given the recent increase in tax receipts due to higher commodity prices, it may be fiscally neutral as well. So that is some slightly positive news. However, there is always the overhang or the uncertainty with regards to, has the political situation been fully solved from a global investor perspective?
I tell you, I will be going to him in 2 weeks' time because I've held back on buying a ticket to go and attend a friend's wedding on the hope that we will see a rand at 14. But we'll have another conversation on that in 2 weeks' time. Thato, what has also been a prominent theme this week is the blockbuster earnings that have come out of the mining sector. And today we have a guidance from Gold Fields indicating the same. Quite interesting, the performance of Gold Fields, though, because you see costs ticking higher, but the fact that commodity prices have battered well for them, kind of buttressing the increase in costs from that mine. What do you make of what Gold Fields is set to report?
Well, the trading statement coming from Gold Fields indicates that earnings per share would increase significantly year on year, somewhere between 110 and 130%, largely due to the increase in the gold price, as well as additional volumes being sold relative to last year. So on both of those fronts, it has been quite positive for Gold Fields. And of course, the currency does play into that as well. And we do know over the past year there was significant rand depreciation, and given that the price is denominated in dollars, that is also positive. So you do have a currency impact there as well. The mining companies in general have done very well in this current cycle and have refrained from additional capex, whereas in the past commodity cycle, all the mining companies began adding additional capex and expansion plans. And obviously, once prices started to decline, those projects didn't look quite as appealing from an NPV perspective. So they haven't done that this time, which is a primary reason why they're now able to start paying increased dividends. And this has obviously been very beneficial for investors. And investors have been anticipating the increase in dividends. And we can see the dividend yield going north of 5%. And for mining companies, that is a sign that everything is going well at the moment. It may be a sign that we're late cycle. We'll have to see going forward. But at the current moment, it is looking quite positive for the sector.